Hello, traders. It's Wednesday, the 15th of January, 2020. It's 8 a.m. Chicago time, 9 a.m. Eastern on this wonderful cloudy day here in Chicago. It's getting cold, but we've had a fairly mild winter so far. This is episode number 1672. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market stance is mixed again. Yesterday, it started out mixed. Remember, we were at least in the U.S. markets, we were opening in the middle of balance, in the middle of the range, and the expectations for a choppy, slow session. This morning, the S&Ps the U.S. indices are off of their settlement prices. The Russell being weakest, down 7.2 points. Yesterday, the Russell had a big pop up out of balance, and now it's back in it. It's off 7.2 points or 0.42%. The Euro stocks are the next weakest, down 15 points, and the DAX down 51 points, hovering around 13,400. The Dow is down 74. The S&P is down 7.25. Crude is off 7 cents, trading at 58.16. I talked about crude on that big blow off, what looked like a very clear blow off top up to 65. I think it was 65 or something like that. And now it's trading at 58 and holding sideways. The leader today is gold. Gold trading up almost 12 bucks, $11.90 in the futures in the February contract at 1556 and a half. And the bonds are up 25 ticks with the Bund up 69 ticks. So slight allocation to safety. Yesterday's action was interrupted by sudden news from the White House stating that tariffs against China by the U.S. are likely to remain in place through the election. You can see that play and what the reason for it is. The tariff news SOC in the S&P is 32.94 and a quarter, right near the high. The high was 32.95, and we ended up selling off pretty strong, interrupting the markets across the board. I'll show you that in a minute. Let's take a look at what's scheduled for today. This morning, we got the PPI release. There were several key figures this morning out of the German government. Government budget came in a lot higher than forecast. The GDP out of Germany came in higher than forecast. Inflation rate out of Great Britain came in weaker, 1.3% versus 1.5, giving the BOE more room to ease. And then just about a half hour ago, we got the U.S. PPI month on month came in at 0.1 versus 0.2. Core PPI 0.1 versus 0.2, and year on year came in at 1.3 versus 1.4. What's scheduled for today is the EIA crude stocks looking for, looks like crude stocks looking for a draw 474,000 barrels, and gasoline looking for a surplus of 3.386 million. Fed's Harker at 11 o'clock and Fed's Beige Book at 2, and that pretty much wraps us up for the day. Let's take a look at what was expected yesterday. Yesterday, as I said, the day before, we had a rally day with the point of control pushing the high of the day. And so yesterday, the expectation is for a choppy open, and eventually I was looking for that high to break. You can see on both scenarios, looking for the high to break and then potentially to fail back through, more likely to fail back through and hold sideways for a balanced day yesterday. That's what I was expecting. Instead, we got what looked like scenario two, almost to the tick here at 95. and then it sold off. So yesterday played scenario two pretty much on point. Here's the action. A drift down, pretty choppy open. Both sides played both sides of the open quite symmetrically, completely sideways. Let me fix this a second. Pretty sideways, and then we start to lift back in, and then we finally break that high, push to 95 on the dot, and then the news comes out, pushing us back to the open, back into the opening swing. We attempt to push out, but unable. There's really not much I could do with this run here, but once we see that this is a weaker test, now we're looking for a pullback, which we got right in here, and now we can push the short side, aiming for neutral on the day, and it finally paid out right down here. That was about 14 points. This pop higher did not make much sense to me, but then again, we started the day balanced, open auction in range, and then we break the IB high, we break the IB low, so there's no surprise that it continues to kind of trade on both sides. We really broke the IB on both sides multiple times with a profile that was mostly balanced yesterday, has a very, very valid balance area. We're opening inside, I mean, value area. We're opening inside of that value area. The point of control, the open, and last week's high are on the same price at 3283.75 ish. And then the overnight session is an inside, put in an inside day as well. And we are opening right on the lower edge of yesterday's value, below the overnight point of control. It looks weakish to me. I saw several people on Twitter stating that given the action from yesterday and where we opened, that this would set us up for some weakness. I disagree with that. The back testing this for ages. Generally, when we end up with a point of control on a rally day at the high, we generally take out that high, and it's a relatively high probability play. Again, past performance is not necessarily indicative of future results. But what we've set up is a pretty Gaussian day, pretty normal distribution day, and we are opening right on the edge of that value area. So we're opening in range of value so far, unless something comes along and thwarts that. Note that despite the fact that we got, this is the open, this green dotted line, this green marker is the open. And that marks the 0 point for Delta. And if you look at how the Delta traded yesterday, even though through good sections of the day we were below the open, the Delta was higher. There's a market. The market has a strong appetite for the longs, for buying equities right now. And we saw that yesterday in that the market actually pushed below several times, yet the delta didn't breach that 0 line at all. The delta showing strength throughout. It's the buy programs are just very active, seem to be active all the time with impunity. So I wanted to get into that for just a minute and show you this graph from wolfstreet.com. They just simply charted the repo operations by the Fed um, since the point where they were expected to pause and ended up talking about cutting back in September and into October. This is how much the Fed has done in repo operations and has gained has inflated its balance sheet by and this apparently is what's blowing the market up. It's a tremendous amount of buying that they've done, but we're not calling it QE. You can see the weekly operations and the balance sheet, and it's up 215 billion at the peak. Currently, a little bit higher than that. I think they've continued to buy, and they're not calling it QE. You're not allowed to call it QE. It's just the repo operations. But really, this looks like QE, a strong, strong injection of equity, of money into the market. And in fact, I talked yesterday about the article in the Wall Street Journal where the Fed is considering injecting money straight into hedge funds to distribute to invest. So the Fed put is just as good as it's ever been, potentially even better than it was during the housing bubble. The Fed's still dealing with the same structural problems with the global financial system that we have run into through the 2008 to 2011 scare. So it still hasn't been addressed. We still have the same issue of having to print money. That coupled with the tax package that was passed by POTUS in Congress last year, those two things are really pushing the market into a strong risk appetite. I'm not here to tell you that it's scary and look out below and it's going to be. I don't think that way. I don't think it's healthy to think that way, to be honest with you. Um, it is what it is, but by all measures it looks like a bubble to me. But this bubble here can go on for quite some time. It's got some oomph behind it. This is a hard to see chart. I get it, but what's on here? Actually, let me make it a little easier. But what's behind this chart? This is a chart of the main underlying sectors of the S&P 500. I chart it for the day. It starts at zero, and it measures basically the from the opening price where each sector is, and it helps me see on a relative basis what the sectors are doing versus the opening print. And you could see yesterday there was quite a there was kind of a congruent move. Even though techs were weak early on, there's really a general kind of move up until the China news. And the China news caused a disruption across the board. It doesn't matter what asset you're talking about, we saw disruption in it. Here are the safety assets, and we saw the same thing. The same thing. The disruption came at 12:36 Chicago time, right in here, and you see gold going haywire. Gold futures going absolutely bananas here, just popping up and down before stabilizing. But you can see that money quickly moved into the 10 years, the Bund, and so on. And it's a kind of a market-wide disruption in the auction. And this is what it looked like on the heat map in order flow. We were grinding along, and you could see how much liquidity there was before that point. The market was just kind of trading along, algos, bid offered, lots of action on both sides, and we're chugging along. We pushed through the liquidity at 32.90, a small pause there, and then continue to squeeze higher as we get into 95. Uh, Really nice little play here. It goes dark. It goes from dark to light to light to bright to bright, and then it holds on. And it's all just part of the process. And then the news comes in. See this wall right here, the liquidity wall? That's where the news comes in, and the systems immediately shut off. And you can see that there's automation there because all these systems shut off in the same instance. Essentially, news comes out, and immediately the market detects a change and it shuts off. And then from that point forward, you could see the quick drop on the news. From that point forward, you could see how dark the heat map is, implying a lack of liquidity um, relative to what was there. So when we were back here, you could see there are 500 lots, 300 lots, and so on and so forth, playing along. But then, as soon as we go past it, you could see it drops to 100 and 200 lots, mostly a couple of 300 lots in there, one 300 lot in there, and it just gets thin, and it remains thin as the market doesn't know what to expect. And once we stabilize, we have this clear test down here again. Dark, dark, dark. As the market moves towards it, it gets brighter and brighter, which means liquidity is coming in contrary to the movement of price. So we expect some sort of a bounce here, and then it starts to turn the other way. And now we're getting more confident. Now we get systems getting in here and putting in, coloring the map a little bit and getting more liquidity into play. The SOC, the scene of the crime for the news, was right here at 32.94 and a quarter, something to keep an eye on. And so that's how things played out. Since then, let me squeeze this together. So here we close, we reopen, and we've had steady liquidity at 32.98 and a quarter, and several other areas. 32.90 again, getting its liquidity back from yesterday. Beneath us, 32.75 has been steady right here. Expecting that to trade out if we get down there. Yesterday's low is 32.77 and a quarter. The overnight low is 32.77.75. An inside session overnight, the high 32.88.50. So overall, we're looking like we're stacked pretty well on the top, but we're in the middle of nowhere here. You can see by the coloring of the map that we're kind of in no man's land currently, with a fair amount of expected, liquidity, which gives us an expectation that the market is likely to resume its push higher in the way that it's stacked. This is purely, this is not a read that to trade off of. This is a purely order flow and liquidity read that we're just sitting here and we are likely to squeeze higher. Give the market just any excuse to push higher, and it's likely to push back up to 32.90 from here, 98 and 3300. Let's move on to what's expected for today. Today we're opening, oh, hang on. Let's not do that just yet because got to review the overnight. Here's the overnight, 211,000 contracts, which is okay. It's high-ish, 211,000 contracts, but the market immediately opened right where it closed, and it came off. The sellers came in immediately in the Asian session, and it just sat sideways until the Europeans came in. The Europeans came in, sold off a little bit, and have walked it up to retest the overnight high, almost at the same price, for what seems like a completely balanced and very boxy profile overnight. We're sitting beneath VWAP, beneath the overnight point of control, looking weakish. But as I said, any failed attempt to push lower is likely to squeeze us higher and move us back into rally territory. So the market's going to wait. The bigger participants today are likely to wait to see what kind of reaction we have, and then we're likely to squeeze higher. Now, That's just based on the longer term trend, right? We've got this nice little channel we're working with here. Um, from an auction, purely auction perspective, we're looking for an open auction. We're looking for it to push higher. I'm looking for a squeeze back up, looking for it to push higher into the and to test the to cross the entire range, consolidate for a little bit, and overall, I'm looking for this to squeeze back to the upside as it's done in the past. Once the news blows over, the market tends to take a bid and continue in that direction. Alternatively, I'm looking for an open auction that trades around the point of control, starts to move higher, gets an impulse down, breaks out and below the overnight low, and then it starts to retest and then starts to move towards the 3273, which is the point of control in this area, for a little bit of balance before it bases and comes back in. That's what I'm looking for. The alternative view, the tertiary view, is that if this news on China persists, which not expected, we're likely to get an open test up, drive down, consolidate, and then start to move to lower values down into the 3265 area and potentially 3260 before we see a bounce into the close. Not really expected, but we'll see. And then, of course, if there is good news, then we may get an open test down, drive up, in which case we're looking at 3300 as a key target above. Let me pull up the stock zones here. There are several zones in the way, 32.99 to 3,300 and 3304.75 above there. Whew, it's a lot to cover. Good luck today. I know this went long. Good luck today, and just keep the big picture in mind. Okay, don't get caught up in the minutia as you're trading this market. Take care.